Today's session is a continuation of what we have been discussing for the past couple of weeks. So this is also in relation to the payments industry. And for today's session, I have summarized some information from watching YouTube videos of interviews and talks involving the current and former CEOs of Mastercard. The current CEO of Mastercard is Michael Maybach, and former CEO is Ajay Banga. And so these two people have participated in several interviews, and they've also been involved in forums or conferences with other industry leaders. And I have summarized what information I have found to be pertinent, and I have compiled a few slides based on that. Mainly the talks focus on the following areas. So general industry trends and company capabilities, and then digital currencies, cryptocurrencies, and other future trends that they envision, growth and vision that these CEOs have for the next 5 years in relation to the payments industry, and then points made by other industry persons. So this is what we'll cover in today's KKSS. So with regard to the general trends and capabilities which the industry leaders see, of course, the first point is something that we have already talked about: more people wanting to use digital banking, and the usage of cash and debit cards or credit cards is declining. One other point that they talk about is the ABCD of payment rails. So this was mentioned by Ajay Banga in an interview, where ABCD in the A stands for account to account, B stands for blockchain, C stands for cards, and D stands for data. So account to account is nothing but the direct account transfer that we have, which is typically enabled by most of the payment platforms that we have today. And blockchain is, I'm sure you might be familiar with the term, it is what we call as the distributed ledger technology. So how it works is, so any transaction that happens in the blockchain environment, it has to be validated by all the participants in that blockchain. So that is done to ensure the validity and the security of the transaction, and also to ensure that there is no possibility of any fraudulent activity happening. So that is how blockchain works. And then cards is basically the credit cards and debit cards, and data is the customer data related to the bank account information, KYC data, and all those things. So these four components form the basics or the basic parts of the payment rails. So payment rails is nothing but how the payment on the platform is enabled. So is it a direct account transfer, or does it happen via blockchain? So that is why that is what this list means. So these are the main channels via which the payments happen in the payments industry today. Apart from these four, the other two important factors are what is called as PQR. So P stands for push payments, and QR is the QR code. So QR code, I'm sure all of us are familiar with today. We go to any merchant and they have the board with the QR, which you can just scan using your mobile phone, and then the payment will be made to that merchant. And apart from that, there is this concept called push payments, which is nothing but the traditional payment channels that you have. So this will be like your checks, and cash payments and so on. So these are gradually declining today in the face of digital payments, but still they do exist in today's payments ecosystem. And
hey Sai, sorry, what is push payments?
The conventional form of payments, such as checks or cash checking.
Okay, got it.
So where it is like we push the payment from our side to the payee. So we do it on our own account. So that is why we call it as a push payment as opposed to a pull payment, where the company or the merchant debits the amount from our account, but rather we pay the merchant. So that's why we call it as a push payment.
So whenever, let's say, a single party has to pay, let's say thousands or lakhs of people, I would assume that's also considered push payments, right? NEFT,
Yes.
IMPS,
Yes,
whatever
yes,
that.
yes. Yeah. So any, let's say, for example, a bulk sum of money has to be paid. It could be a one-time payment, so that will also come under push payments category.
So the ABCD that you're talking about, see, that is so there is an account, blockchain, cards, and so why is data part of this thing? So, and what is the meaning of payment rails there? Is it what is driving the whole payment scene? Is it what it's saying?
Yeah, a payment rail can be considered as a channel via which the payment happens, and these four are the fundamental components or important parts of the payment rails. And how data helps here is, so for example, in the case of the customer that we are dealing with, right? So they have the option where their customers can integrate their account with a company called Plaid, right? And Plaid is an aggregator for data. So when we sign up on Plaid, we sign up using our bank account details and other information, and Plaid directly accesses our transaction history, bank balance, and so on. And this transactional data can be used for pushing more personalized offers to customers, or to determine whether the customer is eligible for a loan and so on. So a lot of the payment platforms today have offered these kinds of value-added services, and the data is one key aspect which helps them do that. Hello?
Great. Thanks, Sai. Let's proceed.
I have one question. So the crypto will come under data or blockchain?
It will come under blockchain. So blockchain is one technology which is being used in the payments industry today to facilitate transactions using cryptocurrencies. And I've got one point related to blockchain in a couple of slides down the line. We'll look at that too. And also the centralized system with distributed service, what I put as the last point, right? So this forms the backbone of Mastercard's highly reliable payments processing system. So when I say reliable, what it means is minimal or zero downtime. So imagine a huge company like Mastercard, right? So they have a worldwide network which enables transactions to happen using the Mastercard, that credit or debit card, right? And imagine even if this network goes down for a few minutes, then the losses will be huge, right? So that is why they say the infrastructure which enables these payments to take place should be highly reliable, or the uptime should be almost 100%. So that is where we are able to provide that 100% service level to our customers. And in light of a hugely competitive scenario that exists in the payments industry today, this reliability is all the more important. And this is something that gives customers competitive edge. And additional factors which give the companies that edge are the information analytics. So the D part of the ABCD that I was talking about, right? The data which companies can mine for insights regarding customer spending patterns and their other characteristics. So that is what they call as information analytics. And of course, artificial intelligence, cybersecurity capabilities, and so on. So artificial intelligence is the scoring algorithms that we have to determine whether the customer is worthy of receiving a credit line. So that is a place where AI plays a huge role today. And cybersecurity is of course essential because there are a lot of state as well as non-state actors who want to take advantage of the payment platforms, and who would hack payment platforms to get customer information and so on. So cybersecurity is also one important thing which payment companies consider, which payment companies have today. So this is on the general trends or capabilities in the industry. And one growing area in this industry is the digital currencies. So we discussed this a couple of weeks back as well. And digital currencies launched by central banks Mastercard has a vision to enable transaction using these digital currencies. So one example here is that they have issued prepaid cards for transacting with a digital currency known as sand dollar. Okay, so sand dollar is the digital currency launched by the Central Bank of Bahamas. So Bahamas is a group of islands in North America, and they have launched this currency called sand dollar. And Mastercard has formed an exclusive partnership with the Central Bank of Bahamas, where you can use the Mastercard prepaid card. You can load it with this sand dollar digital currency and use it for transaction. Now, digital currency is there is no physical form of a currency that exists. There is no note, paper, or coin. It exists purely in the digital format, and it is that way. It is different from the normal paper-based currency that we use today. This is not the only digital currency. And China has launched something called as a digital yuan. That is one more form of digital currency. And Mastercard is also in talks with the central banks of 7 different countries for the launch of CBDCs via Mastercard. Now, CBDC stands for Central Bank Digital Currency, which is the government-issued digital currency. So why do we call it a government-issued? Because, so for example, if India were to launch a digital currency tomorrow, it will be issued by the Reserve Bank of India. Okay, and you can just contrast this with the other cryptocurrency formats that we have today. Cryptocurrency is also a form of digital currency only, because there also we don't have a Bitcoin paper or the literal coin for Bitcoin. It exists only in the digital form today. But that is more of a privately issued digital currency, and it is unregulated. So there is no central authority or a governing body which controls the circulation of a digital currency like Bitcoin. But on the other hand, you take the sand dollar or the digital yuan, they are controlled, their circulation, their issue, and everything is controlled by their respective governments. Okay, and Mastercard will be or wants to be an enabler for these transactions that are supposed to happen using the digital currency in the upcoming months and years. So this is on digital currencies. Any questions until now? Okay, so moving on, the other 2 growth areas which are seen by industry leaders today is essentially the cryptocurrencies and certain other trends. So their opinion on cryptocurrencies today is whether or not a company like Mastercard accepts the transactions or enables transaction using private cryptocurrency will be based on certain principles. Okay, and these principles are as follows: regulatory compliance, data protection, stability, backing or guarantee. So regulatory compliance is basically do they adhere to norms proposed by the governing bodies of countries. So for example, in India until very recently we did not have cryptocurrencies, so transaction using cryptos were not allowed. But now we have allowed those transactions, and that is why you see a lot of ads today where customers are encouraged to sign up on certain platforms and trade cryptocurrencies. Okay. So that is what we mean by regulatory compliance, where the government issues certain rules and regulations by which those transactions can take place. Data protection, of course, I think this is self-explanatory. What do you mean by stability? So stability is basically the cryptocurrencies which are, in case they are used for transaction, should not be volatile. In fact, that is what I mentioned in the second point as well. Volatility of today's private cryptocurrencies make them unsuitable for payments. What does this mean? So for example, you take a Bitcoin, right? So the value of one Bitcoin today is $49,000 US. Okay, and if you look at the value of one Bitcoin, let's say some 5 or 6 years back, I think in 2015 it was around $300. Today it's $49,000. Okay, so the growth seen by the value of Bitcoin is huge. All right, and even on an intraday basis, the value of the Bitcoin fluctuates very highly. So that is why people use them for trading, and they don't use it for payment. So for example, imagine you have purchased some pen using Bitcoin. Okay, just a hypothetical situation, not possible in real time. So imagine that pen costs like $10 today. Imagine the value of Bitcoin is $10, and you have purchased that pen for $10. 5 minutes later, the value of one Bitcoin goes to $20. Okay, so this high volatility that we see in the value of today's cryptocurrencies make them unsuitable for payments, and the payment platforms such as Mastercard or Visa consider this to be a very important factor. They want the cryptocurrencies to reach a very, very stable position before they are used for, or before enabling their use for day-to-day transactions. Okay, and then the other principle which companies look for in cryptocurrencies is the backing or the guarantee. So for example, you take a conventional currency like the Indian rupee, it is backed or it is guaranteed by the Reserve Bank of India. If you take a currency like the US dollar, it is guaranteed by the Federal Reserve of the United States. But there is no organization or there is no body which backs or which can give a guarantee for the private cryptocurrencies that we have today. Okay, so which is to say that there is no reliability as to whether it will even exist or not tomorrow. Okay, so Bitcoin, if you see, it was issued or it was invented by a private individual, and now people are using it for trading. But there is no one particular regulatory authority which backs or guarantees the validity of that cryptocurrency. But
on multiple occasions, on a single day, it has fallen by 30% in the past.
Right. So yeah, I think so. These are the reasons the payment platforms today are very unwilling to accept the usage of cryptocurrencies on their platforms. And with regard to future trends which companies are envisioning, connected devices or the Internet of Things are set to make payments a lot easier and more seamless in the next 5 years. So one example that the CEO of Mastercard gives here is that it is very much possible that let's say in 5 years you take your car to a gas station, you fill it up with petrol, and you go to the car wash, and then you grab something to eat from that convenience store in that gas station. Okay, in this entire scenario, you will have just one single identity which will be linked to your bank account, and all the transactions, filling up of the petrol, the car washing, or picking up any food from that convenience store, everything will be linked to this one single identity that you have, and all the transaction will happen via those connected devices. Let's say a device which has been fitted onto your car or onto your mobile phone. So this is even today we have in India the UPI, right, which makes these real-time payments possible. But in the US, this does not exist. There is no such thing as UPI, or there is no such thing as real-time payments as of now. Surprising, but true. They don't have the real-time payments right now. There is something called as the FedNow, which is like in the works. It is supposed to come in sometime in the next one or 2 years, but real-time payments do not exist in the United States as of now. So this is, they still talk about this as a novelty. And other point is that the going forward, all customer data will be integrated with transaction data to replace traditional credit scoring methods with more advanced algorithms. So this was actually mentioned in a talk with the CEO of Mastercard and the CEO of Wells Fargo. And the way they do this credit scoring now is basically only using the deposit information. Okay, so how much deposits that the customer have in their bank account, and what is their transaction history. So based on these two factors alone, they determine whether a customer is credit worthy or not. Okay, but going forward, what they want to have is customer behavior outside of the banking system. So what are the lifestyle habits of the customer? Where does the customer spend money? What is the so for example, let's say the insurance history of the customer, or any other commitments that the customer might have. So imagine you have one single identity for that customer, right, which will enable traceability through the entire financial ecosystem. So this will help them bring in more data by which they can fine-tune their credit scoring algorithms to arrive at a more accurate score. So these are their opinions on cryptocurrencies and future trends in the industry. Any questions here? let me move on. With regard to growth and vision for the future, the payment industry companies are looking to acquire companies in the areas of real-time payments and emerging technologies. So real-time payments, I was just talking about that, and emerging technologies is basically the blockchain. And companies today payment companies are realizing the value of partnerships. Okay, that is because they realize that there are certain other companies which do that particular job better, and they don't have to bother about that because it's just an extra work for them. This is something very similar to the outsourcing concept that we have in today's IT industry, for example. Okay, companies don't have an in-house IT capability, but rather they outsource those IT services to an external company. So a similar thing is happening in the payments industry today. So just see the next point. Companies such as PayPal and Apple, right? They have formed partnerships with Mastercard because of Mastercard's technological expertise, like tokenization. So tokenization is where is a process by which all of your data is masked and it is not available to the merchant. So you transact on a particular platform using PayPal or Apple Pay, right? The platform or that vendor cannot see your bank account details. They cannot read your bank balance. So everything is fully anonymous, right? And this anonymity is enabled by this concept called tokenization. And Mastercard is one such company which has an expertise in this area of tokenization. And because of Mastercard's expertise in this field, companies such as PayPal and Apple form partnerships with Mastercard. And there are other partnerships also in the works. In fact, Mastercard has partnered with Apple for issuance of something called as a digital card. Okay, so until now we have heard about Mastercard's physical cards such as a credit card or a debit card, but a digital card, like the name says, it does not exist in the physical form. It can be stored on a mobile phone and thereby used for transactions. So the purpose of this is because if you see Apple, right, they have a payment methodology called as Apple Pay. Okay, but today the market penetration of Apple Pay is not that high. So you might see payment buttons for net banking or debit card or even PayPal, but spotting a payment button for Apple Pay is very, very rare. Okay, so what Apple has done is it has formed a partnership with Mastercard to issue something called as a digital card. So wherever Apple Pay is not accepted, you can. So for example, let's say the platform accepts only a debit card or a prepaid card for that matter. Okay, so there customers can use their Apple Mastercard digital card to make that transaction in case Apple Pay is not there. And one other important point is the financial inclusion. Okay, so what is this concept of financial inclusion? So mostly if you see today's payment companies, their majority of their market is made up of, so for example, if you see B2C companies, their market will be made up of affluent class and middle class people. Okay, but what about those people who are at the bottom rung of the economic ladder? Okay, so that is where we talk about inclusion. All sections of the society, people from all walks of life, they should be included in the digital financial ecosystem. That is what we call as financial inclusion. Okay, so minority population. Again, this is more from a US perspective, where not all segments of the society have equal access to digital payments. So they have certain segments of the population which they call as minorities, and they want to bring in these populations into the digital payments fold as well. Okay, and the other point is access to capital for small businesses. Okay, and here the CEO of Mastercard talks about what he calls as the next 500 million customers. Okay, so where are the next 500 million customers going to come from? If you try to answer that question, they're not going to come from the capital cities or the metro cities or the tier 1 cities. Okay, they are going to come from tier 2 and tier 3 towns or villages, because all the other markets have already been saturated. You take a city in India such as Delhi or Mumbai or Bangalore or Chennai, almost everyone over there uses digital payments. But on the other hand, you take remote town like Dindigul or Nagarkoil, Tamil Nadu, for example, the penetration of digital payments will be very, very low. Okay, and this is where those next 500 million customers are going to come from. Okay, and this is one key focus area, one key growth area for the payments industry today. Okay, and it is not a simple thing to bring these companies or these individuals into that fold, because these businesses, basically their supply chain is not digitized, right? So what are the goods that they're selling? What is their credit worthiness? What is the business that they're doing? How much money are they making? None of this is visible, because all of this data is not at all recorded today. That is why it is so difficult to include them in the financial ecosystem. Okay, so the first step to include them in the financial ecosystem is to digitize their supply chain, so that all of their transaction and other data is recorded. And then once this data is recorded, the companies will have visibility into giving them loans or capital. So that is what we mean by access to capital. So you look at the company's financial records, and then you assess whether that company is creditworthy, and if that company is creditworthy, then you give a loan to that company and enable them to grow. Okay, and Mastercard has also done a kind of experiment with this. Okay, so they had a test group and a control group of companies. Okay, in the control group, the companies did not have digital supply chains. They transacted in the way they have been doing for the past so many years. Okay, in the other group, that is the test group, they gave additional loan to these companies, okay, via their Mastercard platform, tying up with certain other companies. Okay, and they observed that those companies for which the loans have been given, their revenue was increased by 30%. Okay, so this is how we enable small businesses to come into the digital payments ecosystem and grow their business as well. So for companies like Mastercard or Visa, it is not just about growing themselves, but also growing their customers as well. Okay, so this is the concept of financial inclusion, which is one of the key focus areas for the payment industry today. Any questions here? Okay, let me move on to the next one. So apart from the CEO of Mastercard, there are other people who have also voiced their opinions. So Dan Schulman, the CEO of PayPal, has made a point on Venmo. So Venmo is a PayPal-owned company, and it is also a payments platform. And they were able to grow their user base very quickly, because they positioned themselves as a more social platform rather than just a fintech platform. Okay, so what do I mean by social in the context of payments is basically when you make a payment using the Venmo platform, you can use the emojis, you can send text messages, you can share a picture or something of you celebrating or receiving the payment and so on. So it's more like WhatsApp in that way, but it also has the capability to make payments. And this is a key reason why Venmo was able to grow its user base very quickly. Okay. And this point we already talked about, partnerships with banks to understand more about consumers and offer customized services, providing loans to small businesses and helping them boost their sales. Okay. And Satya Nadella, CEO of Microsoft, has made the following points. And this was the point that I was making on blockchain, where he says Microsoft is working on blockchain technology, where it has the potential to reduce the cross-border or the international payment settlement time from an average of 7 days to 5 minutes. So that is the potential which blockchain brings to the table today. Okay, and then one other thing that they're working on is bots with natural language processing capability to provide better, faster customer service. Okay, and this will provide payment companies a competitive edge. And Tim Sloan, the CEO of Wells Fargo, has said that going forward, passwords will be non-existent. Okay, but instead of passwords, we'll have biometric authentication. So something like a Face ID or a Touch ID, which will help you make those transactions more easily. Because customers today sign up on so many platforms, and it will be difficult for them to remember all those passwords. And also, you have to, when you're having a bank account and everything, you will know that you will have to change your passwords every 3 months or 6 months, right? So he expects that the password concept will go away to be replaced by biometric authentication. And the other point which he talks about is centralizing data storage and giving users the right to choose all sharing options in one place. What does this mean? This is basically all of your data which you have submitted to your bank or to any company from which you have obtained a loan, or to any other company for that matter, all of their data should be stored in one centralized repository, and you can choose, you as a customer can choose with which companies you have to share and with which companies you don't want to share. Okay, and you can specify or configure all these parameters right from your mobile phone. So this puts that data privacy, data security into the hands of the consumer, and it makes the process more transparent. Yeah, so these are the points that I have collected for today's session. Primarily the opinions from the CEO of Mastercard, as well as certain other industry leaders. Does anyone have any questions?
So just a quick question, Sai, in terms of
Yes,
what
sir.
you may have noticed. See, I think so for Mastercard, right? I think this is an existential question, right? Because they have been very card based, and so they are now moving to the world is moving to digital payments. So it basically threatens their current business model, right? The pricing would have come down, right? So for example, for credit cards, debit cards, the percentage that Mastercard takes is higher, right? Than, for example, when we do Paytm kind of a thing. So Paytm almost costs nothing. So P2P is anyway, peer-to-peer is anyway, free. It may be for businesses it costs something. I don't know exactly how much it costs for them, but it's definitely lower than if we were to use a debit card, for example, right?
Right.
So the question is this. So basically, now that have you seen their revenue trends, etc.? Have they because there are a lot many more players at this point in time in payments, like Paytm, for example, right? So I don't receive, for example, if you look at when I think in the last 1 month I probably used my debit or credit card only like a couple of times, maybe. Right?
Okay.
The rest all, in fact, the last 1 year to 2 years, in fact, HDFC had sent me a message once saying, so you have not used your debit card in the last 1 year.
Okay.
Right? So that's the kind of thing that has happened. So the question is, it's great to see that with tokenization, even Apple is in touch with Mastercard, etc. So that's what you had mentioned some time ago.
Yeah.
But what I'm asking you is, has their revenue gotten strained over a period of time? Has the growth rate decreased, etc.? Do they have to reinvent their sources of revenue? I'm just trying to understand.
I have not checked that until now, but let me look into it and I'll get back to you on that.
Okay. I think Visa also would have faced a similar thing, right?
Right.
Because they compete head on.
Yeah. So I'll get that information. Okay. So yeah, that's what I had for today.